Good afternoon, this is Clark Neighbors with BIS Commodities, Cedar Rapids, Iowa, with the market recap for the week ending March 25th, 2016. We continue to see pretty good strength in the grains in the soy complex. For this week, soybeans are up 13 cents, and for the month of March, soybeans are up roughly 50 cents. Corn on the other side, 3 cents higher for the week, 12 cents higher so far for the month of March, and wheat actually down a penny for the week and about 10 cents higher for the month of March. So we have seen a pretty decent up move in the soybeans. This recent move to the upside of soybeans seems to have been led by the soybean oil, with concerns of palm oil supply, especially in Malaysia. And that has been the leading factor of the soybeans thus far. Now keep in mind, since last summer we've had three similar corrections, bounces, up moves, however you want to look at it, in the soybean complex, in very similar type moves of this nature, 50, 60 cents, give or take. One in late September, early October, another in December, and now here we are in March. So we'll see how that transitions as we have next week. Obviously, March 31st report with planted acres, projected planted acres, in the stocks report. To the best of my knowledge, no average trade guesses out for planted acres or stocks yet at this point, but as far as planted acres, it feels and looks like most people in the industry are looking for planted acres on corn to be somewhere around 90 million acres, which would be up roughly 2 million acres from a year ago. In beans, roughly unchanged in that 82 or 83 million acre area. Now keep in mind there's around 3 million less acres of wheat, winter wheat this year than a year ago. And also keep in mind we had quite a bit of prevent plant in 2015. So as you put these numbers together, the market will anticipate early next week, maybe what the trade will say next Thursday, or the USDA, will say next Thursday, and then go from there. Stocks will be another factor to watch. Unless we see some major changes in feed usage, those numbers should not come at too much of a surprise, it seems. Basis over the last week, corn's had a steady, firmer tone, especially in the east. We continue to see larger basis premiums in the eastern corn belt than the western corn belt, as we've mentioned many times. That has something to do with the smaller crop in the east, the bigger supplies in the west. The farmer in the east has generally sold more old crop to this time than the western corn belt producer. Now keep in mind, with this recent rally in soybeans, though, we have seen a pretty sizable pickup in movement of old crop soybeans. And in just a second we'll talk a little bit about new crop soybeans. So spreads, corn spreads continue to be fairly tight considering the fundamentals, but again, that eastern corn basis and thus the values of corn through Chicago and so on has kept corn spreads fairly tight. On the other side, because of the weakening basis in beans, because of the movement over the last 30 days, the bean spreads have widened out some. So we'll see how that progresses as we get into the growing season. Moving forward, if you're a producer, one thing to consider with this recent rally in the beans, again, we're up about 50 cents for the month of March. November beans tonight closed at above 920 for the fifth time since last summer. This may not be a bad area to at least to begin some risk management or some sales of new crop inventory or supply that you may have. Feel free to call your broker and visit that more directly if you need to look at cash sales, if you need to look at some hedging possibilities, or look at some option type strategies to help maybe lock in some initial sales on new crop beans. The CRB index, the Commodity Research Bureau index, has had a nice bounce here over the last month. Also, we're down a little bit this week, A lot of that's due to the correction we've seen in the energy complex, which not too long ago was sub $30 a barrel, now up closer to 40 or a little higher, 40 or earlier this week. So that firmer energy market has brought back commodities to some degree as a whole. Going forward, again, the report this coming Thursday could be key, and then obviously we're in that major transition time frame as we start talking about new crop, as we start talking about planted acreage, planting progress, spring weather, etc., etc. So this should presumably help bring on some increase in volatility in these markets, which these markets have had very little volatility all the way going back to last summer. If you have any questions, feel free to call us here at the office in Cedar Rapids. Phone number is 800-373-2525. Catch us on BISCommodities.com. And with that, we wish everyone a very happy Easter.